Hello world, my name is Ara. I'm a full-stack web developer with a passion for investing and teaching. Today I would like to talk about Facebook. Facebook is my favorite investment right now. I think the stock is going to $200 sometime in the first quarter of 2018. So I'd just like to tell a few reasons why I think this is the best investment right now. If you can open up another window in your browser, you can see that Facebook stock is currently trading at $155.07. So let's look at some of the key statistics. Now, a longer-term chart of this stock just shows it going up with relatively very minor fluctuations. So this stock has a market cap of $446 billion, which makes it a very, very large cap company. It's worth a lot. It's behind Google, it's behind Microsoft, it's behind Apple, but overall this is a very, very big company. The PE ratio, the price divided by earnings ratio, is 39.16. That is very high for a large cap stock. Going by what Fidelity has, the 5-year average of the PE ratio is 182, which is very, 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 very high. Very few companies get a PE ratio that high. So relative to that, 39 is not very high. But compared to other stocks that you can invest in, 39 is still pretty high. The enterprise value of the company is $413 billion, which is less than the $446 billion market cap. It's about $33 billion less, which is a very good sign. That means that Facebook, in layman's terms, Facebook has a lot more cash than it has debt. It does have a positive book value. It's worth something. They got a lot of money on the books. The price to cash flow ratio is just under 30 times. Which is a very good sign, which means Facebook is bringing in the cash. The PE ratio takes things like depreciation into account, which normally makes the PE ratio look a little higher than the price to cash flow ratio. And the price to book value is, the book value of this company is $21.46. The price to book value is about 8 times. So this is kind of a hefty priced stock. So why is this my favorite investment right now in 2017? It is because of growth. The earnings per share growth. I'll just read off some of these numbers here. And everything that I read off, I expect to continue into the next couple of quarters. I expect the numbers to be pretty much the same. So going from the top, earnings per share growth last quarter versus same quarter prior year, 73% growth. Earnings per share growth trailing 12 months versus 12 months before that, 131% growth. Earnings per share growth last 5 years, 49% growth. So these are very big numbers. All 3 of these numbers are over 49%. No matter how you look at it, Facebook is growing earnings per share over 49%. I don't know the statistics on this, but that is probably putting Facebook in the top 1% of companies as far as earnings per share growth, which definitely, to me, makes its high price justifiable. Now it's revenue growth. How fast is it growing sales? Last quarter versus same quarter prior year, 49%. Revenue percent change over the trailing 12 months. TTM is the abbreviation for trailing 12 months, if anybody doesn't know that. 53% growth. Revenue growth over the last 5 years, 49% growth. All 3 of these numbers are right around 50%, which makes me think that it is going to grow revenue this coming year by about 50%. Book value per share growth last 5 years, 69%. The assets on its books growing by about 69%. That is incredible. That's so incredible. Cash flow cash flow growth rate, last 5 years, 56%. These numbers are ridiculous. These numbers are so ridiculous. So that very high PE ratio that I was talking about a couple minutes ago, 39 times PE ratio, 31 times price to cash flow ratio, those numbers are not looking so high if instead of using the earnings from the 12 months that have already passed, we're going to use the earnings from the 12 months that are upcoming, the next 12 months coming up. Same thing with the cash flow. If we're going to use how much cash Facebook is going to make in the next 12 months instead of the previous 12 months, that's going to bring these numbers down a lot. I expect the PE ratio, if Facebook were to stay at $155 a share right now, if Facebook were to stay at that price, this PE ratio, I would expect it to be about 26, 25, 26, 27, right in that range. And I would expect the price to cash flow to be about 20, 21, 22. These ratios are going to drop significantly over the next 12 months, and that's because Facebook is growing revenue so quick, making their sales higher. It's growing earnings so quick, and is growing book value so quick. Everything about their growth is growing. This is definitely one of the best investments. Do not get scared away by the high stock price or the high PE ratio, because this is a stock that you will probably make a lot of money on. Thank you for listening. Please subscribe. I need the subscribers, and share this video on Facebook if you like it. Thanks.